AVV Nation, all of YouTube, what's going on? My name is Patrick France, Senior Instructor here at VectorVest, bringing you a brand new ETF video. So if you've been following the channel for a while, you will know that a while back we took a look at the ETFs for the major indices because we were noticing a major chart pattern that we wanted to make sure everybody was aware of. Well, now that the market's been selling off a little bit, we're starting to see the inverse of that pattern. And so we want to make sure you guys don't miss out on a great potential opportunity to get back into the market from a technical standpoint. So that way you can stay ahead of the game and make sure you're prepared for this major pattern breakout that could be occurring very, very soon. So if you're ready to learn, if you're ready to make sure you're staying ahead of the game, as always, smash that like button, subscribe if you're not already subscribed, and let's jump right into it here today. All right, welcome back everybody. So in the last video that we did when we looked at the major indices and their ETF counterparts, we were looking at a head and shoulders pattern. After a long bull market, this is typically indicative of a reversal in the market once we have the confirmation of that pattern being formed. Well, now the market's been selling off. We've seen the major indices all come crashing down. Now it's time to start looking for the inverse, or the inverse head and shoulders, also known as the head and shoulders bottom. So what we're looking for, and if you notice the graph down here, we'll use this as our example before we jump into our graphs here today. But essentially you have a left shoulder, the head which is deeper than the shoulder line, and then the neckline which is formed basically as a level of resistance from the two shoulders here. And then once you see a breakout on stronger volume, that's that confirmation of that pattern being formed, and that tends to lead to a breakout and a great bull run in the markets. So now that we have an idea of what we're looking for, let's go ahead and jump into the VectorVest charts and take a look at the four major indices. So we'll just get out of here. And so starting off with the Qs for the Nasdaq. So as we can see, the markets have been selling off ever since November of last year. No surprise there. But then now, over the last month or two, we've really seen some consolidation and some sideways movement here in the markets. We're not continuing that downtrend as of yet. So what do we see? Well, I'm going to use the freehand line at the very top. And looking at it here, we can see a pretty strong neckline. And that's the key towards the bull market, at the start of the bull market or bull run. You want to see a breakout from this neckline here. So right now we have the left shoulder being formed, which has already been completed. We then have the head, and then now forming the right shoulder. So to see the shoulder line, I'll use the freehand line once again, but you can see they don't have to be exactly even. They can be a little off axis, if you will, but we do have this shoulder line here where it clearly shows the head further below the two shoulders. And now what we're looking for is the markets to start reversing. So early signs of that potential reversal would be looking at the 3 and the 8 exponential moving averages, for example, and looking for that 3 to cross above the 8. Then also, as we talk about week in and week out, we like looking at MACD as well, but looking at MACD to start reversing as well. Right now, MACD is above that level of 0. So from a longer term perspective, it's still in a uptrend. But on a short-term perspective, the MACD line is below that signal line, indicating a short-term downtrend. So looking at it here, we can see the MACD is pretty flat. We'd like to see that MACD start to converge again, meaning that the MACD line is converging with that signal line, or that downtrend is starting to dissipate and potentially heading back higher. So looking at it here, we're seeing the MACD breaking out to an uptrend on a longer-term basis, temporary pullback. We'd like to see it hold above that level of 0 and then start to move higher from here. Also, when we get closer to that neckline at around 370 on the Qs, we want to see strong volume confirming that breakout of that neckline. So that's the first major indice. Let's go take a look at the next one. SPY, similar situation to the MACD. MACD has been breaking out to a longer term uptrend shown here. Short-term temporary pullback, but starting to flatten out here on the MACD. Would like to see that start converging once again. And then looking at the chart itself. So once again, we have the neckline being formed here. And now these aren't an exact number, just more of a general guide to help visualize what we're looking at here today. So here is the left shoulder. Here's that neckline. Here's the head here. The right shoulder, right neckline being formed. And now the right shoulder being formed as well. So once again, looking at the shoulders, we can see they are moving in this sideways move. Slightly off axis, but once again, that's fine. And now just demonstrating the fact that we have a lower point here making that head on the head and shoulders pattern. So what we're looking for, just like we were noticing with the Qs, a tightening of the 3 and the 8 and seeing the 3 and the 8 go positive, and then start heading higher and break above that neckline on strong volume. So taking a look at the next major indice, the Dow. Dow, similar situation. Neckline's a little bit different though. Neckline is still sloping downward, but you still have a clear pattern being formed where you have the left shoulder, neckline here, right shoulder being formed right now, and the head. Also, MACD on a longer term basis, once again, is still in positive territory. Short term pullback, longer term uptrend is starting to form here based off that MACD. Also, we can look at the MACD. We can see that the MACD line is converging with that signal line on a short-term basis, indicating that downward pressure is dissipating. So looking for a key reversal in the near future on this one. And then last but not least, the final major indice, IWM for the Russell 2000. Now this one is a little bit different, a little bit tighter of a range that we've been noticing with it, but we still get the pattern nonetheless. So putting our line here for our neckline, there we go. Just straighten that out a little bit for everybody out there. There we go. And then we can see we have the left shoulder here. Just pointing this out. The head being formed on a 1-day candle there. And then the right shoulder is being formed as we speak. This one, the MACD is a little bit weaker than what we were seeing with other ones. So be mindful of that because there is that philosophy that the Russell does tend to lead the markets or be ahead of the major indices or the 3 major indices, the Dow, the Nasdaq, and the S&P. So keep that in mind. But right now, we'd like to see that MACD get back into positive territory. We're noticing that MACD histogram is converging or shrinking, meaning the MACD line is converging with that signal line, showing short-term momentum dissipating to the downside. So we'd like to see the MACD on a short-term basis turn positive again, especially at these levels that we're at, indicating that the right shoulder is being formed and we're starting to head back for that neckline for that potential breakout. So that's going to do it. Hopefully today's pretty short, sweet, and simple for everybody out there. Let me know your thoughts on this. Are you been following the head and shoulders pattern? Are you watching this now going forward? Let me know down in the comments below. Also, let me know which ETF is your personal favorite. Are you somebody who likes to trade the Nasdaq or the tech-heavy index? Or are you looking for more of the aggressive moves with the Russell, looking at smaller cap stocks, or just simply looking to perform as the best 500 companies out there in the US markets with the S&P 500? So can't wait to hear you guys' comments down below. And once again, thank you for hanging out. And if you're not already subscribed, and if you've enjoyed today's content, make sure to smash that like button, subscribe if you're not already subscribed, and we'll see you guys in the next one. Toodles.